So first of all, for those who don't know me, I've been a business owner for the last 10 years. I've been involved in property market for over 15 years, both as an estate agent and as a financial advisor. For over 12 years, I've been investing in properties in UK. So this is my strength. This is where we thrive in this environment. This is where we advise our clients. But I've recently graduated from a Oxford University program sponsored by the Goldman Sachs Foundation. I've attended many great seminars at the Oxford University, and I've conducted a growth business master with Tony Robbins. Amazing program. So what I would like to do today is give you some updates on the market, but as well share with you some of the tips and some of the things which I hope will help you run your own businesses moving forward. So let's look at the economic outlook. We're going to look at inflation, interest rates, and housing market. Those three things will be the main focus of this update. So first one, probably one of the most famous things in finance, which is inflation. Everyone is affected by inflation. And the good news is that over the first 3 months of this year, the inflations went down from 4% to 3.2% in March. This is a great sign for the economy. We see on this graph that back in October 2022, inflation was over 11%. It was very, very scary. That's why we've seen those interest rates going up to actually counter this inflation mechanism. And we already see a correct and right trend towards the target market. So the base rate, 5.25%. We still see the base rate unchanged on the 21st of March. 8 out of 9 members voted to keep the rates at 5.25%. The next meeting is on the 11th of May. So what is the prediction? The prediction is that the interest rate will probably remain at 5.25% in May and throughout the Q2 and probably Q3. The main reason is that the government is not willing to make any major move on the Bank of England base rate before they see the inflation floating around the 2% target. I think this is their main goal. This is the main thing, to get this inflation down to about 2%. And then we can see maybe some kind of a movement on the Bank of England base rate. But before that, I wouldn't expect any major changes. So towards the Q3 or maybe the beginning of Q4 even, hopefully we're going to see a slight change in interest rate and Bank of England interest rates, which again would be great news for the economy and for everyone involved in properties. What is the outlook on the housing market in Q1 in 2024? The British economy thrives on the property market. It is a very important sector for the economy. The property prices went up by 2% in Q1 2024 versus Q1 2023. So this is a good news for the homeowners, that the property market is hopefully recovering, is on the right trajectory. The average house price in UK is currently in the region of 288,000. So the best performing regions in UK is still Northern Ireland, 4.3% increase over the last 12 months. So the average house price in Northern Ireland is below the housing in UK in general, 194,000, just over that. But you have to pay £8,000 more on average in Northern Ireland to buy a property today than last year. The London is obviously London. The average house price will be significantly higher than in any other region in UK. 539,000 or almost 540,000 an average house price in London, and that's up 0.4% compared to last year. So the prices are pretty flat in London, and we can see the source of this data. Another interesting informations are floating from the HM revenue and custom transaction report. Is an interesting one because we've actually seen an increase in transaction in February by 1.2%. So currently in February, we had 80, pretty much 83,000 transactions, property transactions in UK. There are the Bank of England data as well, showing the number of mortgage approvals. This is a huge indicator of how the lenders are behaving in the market. And we've actually seen 7.7% increase in mortgage approval back in February. So there were over 60,000 approved mortgages only in the month of February, which again is trending in the right direction. Another positive report is coming from the Royal Institute of Chartered Surveyors. Very positive trends in buyers' demand. On average, we've got a 6% more inquiries this month than in the previous month in January. The new instruction net balance is up 21%. That's the strongest since October 2020. What does it mean? It actually means that there is more property coming to the market. There's more confidence in moving up the property ladder, which again will free up the space for the first-time buyer to jump on the property ladder. And this is an amazing trend which we see. Not all the informations are great. Octane Capital Market Analysis suggests that a mortgage lending in UK over the last 12 months is down by 28%. So to put that into perspective, in the last 12 months, we were down by almost £100 billion in mortgage lending. So 217 billion were lent within the last 12 months. And prior to that, the year prior to over 300,000. So that's obviously a huge decrease in lendings over the last 12 months, which is direct correlation of slow buy-to-let market, cost of living crisis, interest rates increase, and the fact that a lot of people actually stayed put. They didn't want to move up the property ladder. So what are the main conclusions? What can we get out of this data, this information? The first thing, the property market is actually trending in the right direction. We can see more inquiries, more properties coming to the market, more lenders are willing to lend money. The interest rates are more stable these days. So that's obviously very, very positive sign. The lenders are fully aware that the first-time buyer market is the most important thing for the property market in general. So they are actually putting the new products. We've seen a 1% deposit product from Cord recently, which is actually the minimum deposit of £5,000. So the first-time buyers can get a mortgage up to 495,000. So they can buy a property up to 500,000 with £5,000 deposit. There are still products which are 100% mortgages from Skipton. So lenders are fully aware that it's very hard now for people to save deposits. So they are coming up with those new products. They are high-risk products, but the lenders are still confident that the people are going to be able to repay those mortgages. Buy-to-let market is coming back. The rents have gradually increased over the last 12 months, and we can see more and more transactions now being accepted on standard basis where the rental coverage is finally sufficient to secure a 75% loan-to-value mortgage. That's a good sign for landlords, for investors. Inflation's trading in the right directions. The swap rates are still very volatile. So depending on what is happening in global economy, the swap rate goes up and down. But this volatility is not huge. We see the interest rates goes up and down ever so slightly. But hopefully we're not going to be coming back to the increases we've seen the last year. And over the past 5 years, there was over 11% increase in mortgage lending in the spring months. So this is the time we are actually approaching now. The seasonal adjustment is real in mortgage market. More people are willing to buy, to move in the spring months. So overall, the outlook on upcoming months is very, very positive. One of the most important things for any business owner is to grow the business and sustain the growth. It's very challenging in current market, in current economic climate, because a lot of times growing the business requires investments. But how to grow your business without any additional money? It sounds a bit of a cliche, and it's probably not as easy to do as it sounds, but there are ways in which you can actually optimize your business to make sure that your business grows without any additional money. So how can we do that? So we can basically look at a few areas. We can look at your productivity, you as a business owner, and the productivity of your team. We can increase efficiency in your business, which we're going to talk about in a minute. We can simplify and strategize our time management techniques with basic tools like Eisenhower matrix, which we're going to talk about today. Setting your goals obviously is very, very important. There are ways in which you can set your goals in a smart way, which we're going to talk about just in a minute. And I'm going to mention 3 ways of growing your business. According to Jay Abraham, amazing marketing guru, the only 3 ways that you can grow your business. So stay right to the end because this one will be very, very powerful. So there was an interesting study about the productivity at work, which may surprise you, or maybe not. It depends on the way you currently work. So the Voucher Clouds conducted a workplace productivity study, and they surveyed nearly 2,000 UK office workers. And this study have found that on average, employees are only productive for less than 3 hours at work out of the typical 8-hour week, which is fairly shocking. I would probably imagine that the group here, the Polish business owners, the people who are extremely motivated to grow their business, going to do much better than that. But is there a way in which we can improve our productivity throughout the day and look at our team to increase their productivity levels without any further investments? So what were the main distractions in the workplace? So the questions was, what are you guilty of spending time during the workday rather than being productive? And not surprisingly, 47% people have answered that they're checking their social media, they're reading news websites, discussing out-of-work activities with colleagues, making hot drinks, smoking breaks, text, instant messagings, WhatsApps, that sort of stuff, eating stuff, making food in the office, making calls to partners or friends and searching for a new job. So that's obviously a lot of time waste throughout the day. So how long do they believe they spend on each activity, which was another question. And on average, over 44 minutes were spent checking social media. And that's during the working hours. Reading news, blogs, magazines, which are not really related to a work, over an hour, discussing out-of-work activities with colleagues, making hot drinks, smoking, texting, eating, making food, and contacting your friends outside the work. That's on average 18 minutes a day. So if you sum up all of those minutes, that's quite a lot of minutes. That's actually hours and hours throughout the working day. I'm pretty sure that a lot of business owners which are here with us today are not guilty of most of those things. A lot of people will spend maybe a fraction of the time on those activities. But can we actually look at ourselves and our team and look at maybe increasing our productivity by 30 minutes a day? Would that be possible? If you really think about how productive you are throughout the day, Let's say we can be more productive in a 30-minute slot throughout the day. What does it mean for us on a yearly basis? Because putting this into perspective on a yearly basis will open eyes to the possibilities of increasing your productivities tremendously. So 30 minutes a day being extra focused and productive, limiting those little things will give you 2.5 hours a week of productive work, which is 10 hours a month, which is over 125 hours a year. That's over 3 weeks a year of extra productive work. Just imagine if you would have an extra 3 weeks of productive work throughout the year. How better your business could be, what else you could accomplish in this time. On the other hand, if you think about this as a business owner, if you've got a staff members, if they can be productive for extra 30 minutes, if you can cut off on those little activities, how your team can be more productive, gaining an extra month of productivity throughout the year. So how can we actually save the 30 minutes a day? Some of us could probably save a bit more than that, but just 30 minutes a day, we can probably limit our social media, YouTube time. What can help is setting time limits on our phone. There are app blockers limits, which works tremendously well. A lot of times we get on the social media, we just want to check something, but you know how easy it is to get lost. And after 10, 15, 20 minutes, you don't even realize you're on it. It's just how it works. Just dopamine spikes are so incredibly addictive. It's hard to get away from the phone as you kind of searching through the social media. So those time limits can actually help you get distracted from the social media and get back to your daily routine. A lot of time we're spent on preparing meals, preparing hot food at work. So maybe there are ways where you can plan your meals, prepare your meals before you go to work or before you start the work to save that sort of time. Very useful app for any team owner and any business owner and any team could be an app like a Time Doctor, which actually manage your productivity ratings. It gives you the silent tracking, the real-time email notification, daily email notifications, usage reports. You can link it with the payroll. If you've got a staff working remotely, you will get those inactivity alerts on your laptop. And you can track your breaks. So you can actually look at yourself as a business owner, installing those tools and analyzing the way you work over the week or over the few weeks and see how efficient you are. Because a lot of times we just don't know how much time are we really wasting. And if you think about scaling your business, imagine being able to employ someone who works remotely and installing that sort of software on their work laptop, where you can have full control of the time they spend actually working. That could be really, really great tool, which is relatively inexpensive. All the tools are great, but I think what we really need, apart from looking at those distractions and maximizing, optimizing our time, is a great strategy to manage our time. And I'm a great fan of Stephen R. Covey. He's written a book which changed my life, 7 Habits of Highly Effective People. And he talks a lot about the Eisenhower matrix in this book. This is an amazing framework which can help you manage your time and actually manage your decision-making strategies with easy tools to effectively prioritize tasks according to an urgency and importance. So this framework will focus on 4 different tasks which we perform during the day. Some tasks are very urgent and important. The other are very important but not urgent. Some are very urgent and not important, and some tasks would be urgent and not important. So there are 4 things. Let's just break them down into those 4 categories. So in the first quadrant, we've seen there are tasks which are very urgent and very important. These are the things which we need to deal now. This is what we call in our office, we firefighting. We just want to make sure that the task is done because it's so urgent and so important. Very high value task and activity. It needs our immediate attention. We need to prioritize those things and deal with them on a daily basis, like finalizing materials for a launch day, preparing presentation, dealing with a customer who's in crisis. Those are the activities which requires our attention immediately. In quadrant 2, there are activities which are important, but they're not urgent. One of those activities which we know we should do, but there's no time pressure. So we often delay those activities. So they are a really high value task. They support your long-term goals. And they require you to strategize, putting a roadmap in place, optimizing things. Things like regular networking may be very, very important, but it's not urgent. A third quadrant are the things which are urgent, but they're not important. They low value activity tasks. They makes you feel very busy. And we often confuse being busy with being productive. So those activities are responding to calls, emails, certain meetings which may not be very effective, maybe scrolling through your Gmail and just canceling the stuff which shouldn't be there, activities which are not really that important for you. And the fourth quadrant requires of the activities which are not urgent and not important. Those are the things which are unproductive stuff which we do throughout the day. A lot of those activities will fall into the category of, again, social media, cyber floating, interruptions, all those stuffs which keeps us away from being active. So let's look at this matrix as a whole, because knowing which activities throughout the day are urgent, important, not important is one thing, but knowing the relationship between them and what you should do with them as a business owner is a key metrics for you to run your business efficiently. If you've got an urgent tasks, do them first. They are urgent and they are important. So get them straight done. Eat that frog is what Brian Tracy'd say. If things are not urgent, they are important, make sure that you schedule those things. Make sure that you put a time limit on those activities and you do them regardless whether they are urgent or not. They are important to your business. If you've got a certain activities which are very urgent, but they're not important, they probably don't require your expertise. So what you can do with those activities, they are urgent, they're not important, you can delegate them. You can get other people to do it. They don't require your superpower, which may be in sales, management, or in performing certain activities. And more importantly, delete activities which are not urgent and not important. They will eat a lot of your time. And I think the 30 minutes a day of being more productive can be actually saved just by deleting those activities. And the rule of thumb is that the more you perform in quadrant 2, so the more time you spend on scheduling activities, on important stuff, but not urgent, the less urgent and important activities you're going to get. And the more activities you're going to delegate, the more time you're going to get on those important but not urgent things. And again, deleting the low value activities from our day will save us months throughout the course of the year. The setting your goals, it's another very important thing. And I think we have to be very smart about setting our goals. This is what we've actually learned at the Oxford University when we've actually worked on our growth plans for the next 3 to 5 years. The framework of setting a SMART goal is a very interesting one because we are all great at setting the goals, especially in January or in December when we're looking at the year and we really want to accomplish things. Um, but a lot of times there are key components missing from our goal setting strategy, which will make us less productive and probably less likely to achieve those goals. So this framework actually says that your goals needs to be very specific, measurable, attainable, relevant, and timely. And if you tick all of those 5 boxes, you're going to be more likely to achieve those goals in the short and long term. So what do they mean by being more specific? So it actually means that you have to know exactly what your goal is. You need to be able to measure that goal. So what are the objectives? What are the KPIs? How are we actually measuring achieving this goal? This goal needs to be attainable. It needs to be challenging, but at the same time, it needs to be in some way reasonable to achieve, especially for your team. The goal needs to be as well relevant to your goal, to your mission, to your vision. So you don't want to chase a wrong thing. You want to focus on the right thing, which will help you achieve your long-term growth. And the goals, when the goals are timely, it means that there's a deadline. A deadline creates urgency. So if there are long-term tasks which we're looking to accomplish, it's really useful to break them down into small chunks and put a time frame on each chunk. So then we are having more pressure on achieving those little tasks. So let's give us an example. So the specific goal could be increase a turnover by 20% by the end of 2024 with 15% profit margins. As a business owner, you know that turnover is only a flagship figure. But profit margins, profitability, net profit margins are probably more important ones. But we probably not going to increase the profits without increasing turnover at the same time. So those goals could combine a few different strategies. Measurable, put some key performance indicator in place, the KPIs. And again, work, for instance, on a weekly or on an even monthly basis. So what is your KPI for the turnover? Set the baseline, work on your year-to-date figure to keep the track of the progress of increasing the turnover by 20%. It sounds very easy and simple, but it requires discipline. It requires you to sit down with your cash flow statement, with your profit and loss account, and work out what are the costs of increasing your turnovers and how much you have to increase that turnover to keep your profit margins at the current level. Achievable. Set so-called stretch goals. Make sure that those goals are not extremely easy to achieve, but they're not unobtainable. Make sure that you challenge yourself because with a challenging yourself comes growth, and that's where you can actually achieve better results. Be realistic, especially with your team. So a lot of times the goal is achievable, but in fact it's not realistic. So if that goal requires your team to work 7 days a week, 12 hours a day, is realistic? Probably not. It is achievable, but you cannot force people to work beyond the expectations. And one of the things which I can't really stress enough, and for me it's probably one of the most important things because I work great under pressure. Everyone is different, but for me, having those deadlines provide the sense of urgency. So you break down a large task into short-term tasks. So you actually break them down and you achieve those little goals in a certain framework. Works really well in big, big goal settings. So very interesting founding from Jay Abraham. If you haven't heard about Jay Abraham, he's been in the business for many, many years, probably 30 plus years. He's helped many companies grow by 30, 50, 100, 200% just by implementing his tactics and strategies. So I highly encourage you to check Jay Abraham's work. I've recently attended Tony Robbins' Business Mastery Seminar, 5 days, extremely powerful seminar. And one of the tools which we were provided with is a tool of 3 ways to grow your business. Again, according to Jay Abraham, that's the only 3 ways in which you can actually grow your business. And it sounds very easy. How you can grow your business? The first thing is you increase the number of customers. You just increase the number of deals you make throughout the year. A second thing is increase the average transaction value. So you can do that by either increasing your prices, or you can upsell additional products, or increase the value of the transaction by adding more value to the transaction effectively. And the third way, you can increase the frequency of the purchase. If your purchase is very infrequent, so if you sell once and you don't see the customers for the next 2 to 5 years, you can introduce a new ways of being able to attract this customer with a upsell or different products. Or you can actually use a formula when you increase the frequency of referrals. It can work really well. I will challenge you to do a very simple exercise at home when you're checking this growth strategy. If you imagine having a sales of 100,000 a year, for instance, that's your sales. And if you increase this by 10%, it means that your sales will go up to 110,000 a year. The second is increase the average transaction value. If your client buys only once a year, for instance, or two times a year, if you increase this by 10%, by 2.2, and you increase the value of the transaction from, let's say, £100 to £110, so again, increasing this by only 10%, if you multiply the growth of all of those three factors just by 10%, you're going to get 33.1% increase in your business. And you don't have to trust me on this one. You can do your own math. So if you are interested in this framework, just go online, Google 3 ways of growing your business by Jay Abraham, and input your own details into this. What's your turnover? What's the value of your customer? How frequently your customers buy? And if you only increase these metrics by 10%, you're going to increase your business by 33.1%. And I think this is very achievable. If you are able to save a bit of a time, be more productive, implement certain strategies with your time management. Funny enough, if you do the same exercise and you increase your current number of customers by 20%, and if you increase the average sales value by 20%, and you increase the average frequency of purchase by 20%, you will grow your business by 72%, which is staggering. It's hard to believe. But the math is the math. You can do your calculation. So what I want to say is thank you very much for listening. We are here with the whole step-by-step team to help you out on your financial journey. If you need any help or support with either mortgage, remortgage, or you're thinking about investing, or you're looking at protection, business protection, or any other financial things, even if just the questions, you know where to find us. You got all the contact details here, and we'll be grateful to talk to any of you, not only from the mortgage perspective, but as well if you've got any questions about running your own business and scaling your business. So Bart, I will hand it over to you. Thank you very much for that.
Adam, I've made my notes, and it's I am old style type of person who actually prefer written notes. So I've got plenty of different ideas. Thank you very much for sharing. Floor is everyone, so feel free to unmute or just put a comment on the chat. One interesting point is making hot drinks will take 17 minutes of our time on average. That was your presentation. It's funny enough, we are, yeah, I'm bad with that. Every single hour, I'm thinking about what kind of hot drink do I need to do it. So probably just by adjusting number of maybe putting the jug in front of me with the hot water will probably save my time. That's my 10 minutes. But Adam, can you share us like following that? Obviously, this is like theory, which is great. Okay, fine. Then obviously the practice. That's sometimes very two different words.
Yes.
Worlds. What about like you? What have you done with this 30 minutes? How have you improved your 30 minutes productivity over the last, I don't know, 6 to 12 months? What have you done to be more productive in your own business, in your own life?
I think having a focus and a vision is a base of everything because you need to know where you're going. So if you've got a great goals, if you've got a great vision, it gets you out of the bed and you are staying on track. So when your vision is strong and when you are writing your goals every day, rewriting your goals every day, it activates your subconscious mind
Yeah.
and it gives you a platform to actually be more productive. I use a lot of health hacks as well. That's for sure. The cold plunge, the sauna, having a standing desk. You kind of go up and down every 45 minutes, 30 minutes. In the office, I've got my treadmill as well. So I try to get on it for at least 30 to 40 minutes, still kind of working and being productive. But having the right people around you as a business owner is just impeccably important. But being able to delegate tasks,
Hmm.
those which are urgent but not important, those tasks which don't require my attention, has freed up probably more time than anything else. So I would strongly think about what is your productivity level, but as well, what is the best return on your time?
Yep.
So, for instance, me as a financial advisor or me as a business owner and working with a financial advisor, I know how important it is for them to focus on advising the clients. And what goes along the work with financial services is all the admin work which is required. So we try to delegate certain things to our lovely admin team. Um, Someone who's got amazing attention to details, amazing emphasis on completing those tasks, that can help you tremendously with focusing on what you really have to do and floating in this quadrant, which is not urgent, but important. And we know how easy it is to postpone those activities, right? Because they
Yep.
not they're not here, they're not there. They are working towards the long term goals, but again, breaking it down is amazing. So I would say the health is an amazing thing because it helps you focus. Staying hydrated, very very easy. But if you are more productive, then you're going to get more things done. So that's the things which I'm kind of looking at.
2 hours, 53 minutes. This is the average that you shared. It's a really interesting stat. I think I would agree. Probably I would add 4 hours. In my case, in terms of between, I think in the morning, 8 a.m. and 12 p.m. is the place that things are buzzing. Then after lunch, you feel like, okay, right. So you've done something, you had your lunch, and then you just kind of, yeah, maybe no social media in my case, but there are different places that you can actually maybe look at holiday and maybe book all of this flights and so on, and maybe do the things that are not affecting your immediate core of the business.
Yeah,
Uh,
Bartek, we know the machines. We all
yeah,
humans, and we have to realize that. But I think just the basic awareness, just
yeah.
getting away from this 30 minutes distraction. I think we all of us can look at this list and say, okay, so where do I waste my time?
Hmm. Hmm.
Where is the thing which I can do better and be more productive? Maybe it is like preparing your meals. I mean, I would say going to work and thinking about what you're going to have to eat and then searching what you're going to have to eat and then preparing what you're going to have to eat. Maybe there are better ways
Yep.
if you are looking to be successful, right? Because if you are looking to be successful, you have to get an edge.
Yep.
You have to be more productive than others to contribute more, to add more value to your customers, to attract more people. So there are definitely ways where you can actually help yourself. And those ad blockers. But I mean, sometimes you get lost in the social media world, even just checking your own productivity stuff, right?
Yep.
What did we post? How those posts performing? What engagement are we getting? And then suddenly you are back on some kind of a scrolling cascade where you're actually wasting
Mode.
time. And having this time blockers, let's say after 5 or 6 or 10 minutes, it will get you back to the mood of working back. Because
Correct.
sometimes 20 minutes is just like that, and you know it, and I know it, and everyone knows this.
And again, this is all about habits. I think it is like when we talk about the eating habits, we're talking about habits, the way we exercise, the habits that we spend the time. It's a little bit of challenging at the very beginning to actually start off, and then you suddenly see, okay, that's every minute counts. And I like your idea of having this 30 minutes challenge because it's easy to get demotivated by saying, you know what, like 2 hours, let's get back 2 hours, how to do it. Half an hour, 30 minutes is really nothing. And that will give you some fresh mind and idea what to move next. One thing I would like to just get back to quickly of the comment, because you have at the very beginning of your presentation, you did mention about the mortgage market and also the economy and 83,000 transactions in February 2024. This is what you said, that is encouraging more properties on the market, more confidence. What would you say in terms of like let's build a scenario. You are let's two scenarios. One scenario is new is someone who's got some pile of cash, maybe saved, and they, yes, I'm ready to buy my first flat. It's a good time. It's worth wait again. And the second scenario is, yeah, so what about the remortgage? Would you say that a remortgage would be great for like fix this, or maybe not fix this, but just have a tracker rate? What would be your take on this?
Yeah, very interesting. Um, Obviously, all of those things have to be taken into perspective, and the individual circumstances of the buyer needs to be at the forefront of making that sort of decision. I remember back in 2008, the biggest property crisis this country have seen, where people were always waiting for a better time. So the prices dropped 25%. We were trying to contact all the buyers and the estate agents to encourage them to view the properties, to buy the properties. The fundings were very expensive back then, but the properties were cheap. And the people are saying, no, we're going to wait until the prices drop even further. We're going to wait until it drops even further. And then we have actually seen the prices going up, and the same people were still waiting. No, that now the market is on the up, now is going to go down. And at the same time, there were people who were taking action. So if you speculate, it means that you are trying to time the market for the best time to buy. And it's very hard to do because effectively there is so many factors being taken under consideration, where you're looking to invest your money. The properties are only one way to invest money. If you're looking to buy your own flat or first flat, just make sure that you are looking at a wider horizon. So not only 2, 3, 5 years, but maybe slightly longer term, because there are huge costs of acquiring the properties. You have to invest the deposit, the cost of the solicitors, the stamp duty, and so on and so forth. So always think about long-term plans. And if you are thinking about buying, just look at the last 50 years, what happened with property prices. The prices are going up in line with inflation. Some people think it's unrealistic growth. And in certain ways, growth was actually exponentially higher than it should be. And I agree with that. But on the other hand, you are protecting your money against the inflation when investing in properties. So that's a good thing to do. In terms of the interest rates, we are seeing more and more clients currently being able to risk. So the attitude to risk has slightly changed. Um, when seeing the inflation going down and having the interest rates in the region of 4% at the moment for certain products, some clients would entertain having the flexibility and we take the risk of taking a tracker product or even like a discounted product, which discounts the variable rate of the lender. And those are the clients whose attitude to risk is slightly different. They are happy to risk, but they're happy to gain as well.
Yeah.
So if the interest rate goes down by 0.5% in the Q4 or Q1 next year, and they've got a 2-year product, they may benefit from this. It may always go the other way. So there's always an element of risk, Bart, and this is very important for everyone to understand that there's the one thing getting the fixed rate products and not worrying about any type of rates hikes. The other thing is monitoring the Bank of England base rate every month. Because I can only imagine if you are a homeowner and you've got your monthly mortgage payment and you are on a variable rate, you are likely to monitor this Bank of England base rate every month. And if you're happy to do that, then that's absolutely fine. You can probably gain in the long term. You don't know. But when you got a fixed rate, there is a lot of tendency of securing a shorter term fixed rate at the moment. So a lot of clients will take 2-year products at the moment, but some clients just want a 5-year fixed rate, bar, and this is absolutely fine as well. Because when calculating the risk, you're calculating what you can lose and what you can gain. And this is the most important conversation. Okay, I'm actually paying extra more for this fixed rate product. What I'm gaining stability. And the peace of mind is a very valuable thing in life.
Definitely, yes. Thank you very much for this. My own rate